Oh, do we have a great challenge for you today? This is honestly my favorite challenge of all the challenges out there. And it came to me last night as I was thinking about this problem that I get asked all the time by traders of various different skill levels and skill sets. When do I take my losses and when do I take my winners, right? That question is sometimes it's easily answered, but very, very wrongly executed. And so this challenge is dedicated to helping us to win while we're losing. And we had the opportunity to trade with Josh this day and to take this challenge, and he executed it perfectly. This challenge, if executed correctly, can change the way you trade forever and give you the confidence that although you're losing, you know how to fix it. Now, let me add a disclaimer. Do not take this challenge. So stop right now and do not take this challenge unless you have the fundamentals or the prerequisites of previous challenges that we did, namely action points and layers. You need to have done those challenges first and get those down before you can take them into this challenge, because this challenge will use those exclusively. So we need to make sure that you have the action point challenge done and the layer challenge done before you even go further on here. All right, so let's dive in. Let's get to the challenge. As always, don't forget to like, subscribe, and join our Discord. If you join our Discord, you'll have access to follow along every single day and take the challenges that we do every single day. Challenges are there to help you perfect your trading, okay? I always say, practice in a demo account, trade in a live account. And so when we practice, we just want to practice different techniques, different things that we struggle at that we can identify to make ourselves a better trader. We need to get to the point, particularly on this challenge, to where we're just reacting to the market. So we can read the market, then react to it. And when I talk about reaction, I mean without thought. You don't want to think about the movements. We want to practice, practice, practice until we can execute it without thought. That being said, let's dive in. Let's take a look at the challenge. And again, we'll see you guys tomorrow.
So as a level 2 trader, you're kind of getting the confidence. So what I call a level 2 traders, somebody that knows how to fix their trades, and they have proper trade adjustment rules, right? And so I prefer to adjust my trades before I have to fix them. And so there is a difference between fixing your trades and adjusting your trades, right? Okay, so what I want, the challenge here is right out of the gate when you get into a demo account, is I want you to put a layer on that you think is most likely to lose, okay? So I want you to take a loss on a layer, not take the loss, but jump into the market, get into a losing position. So if the market is at the end of a price cycle or at the top and you think it's going to come down, I want you to buy. Now, I want you to buy on purpose so that we can adjust this layer. So practice adjusting. I don't want to say fixing. We want to practice adjusting this layer, okay? Because everybody gets into this situation where this layer right here becomes a bad trade. And you guys saw that I did that today. I do that every single day where one of these layers becomes just a bad trade where you got to give it back to the market. So you got to give it back to the market, and you got to be okay with giving it back to the market, but it has to be on your terms, right? Has to be on your terms instead of the market's terms. And so that's what we're trying to work on today is when do I give that back to the market and what's my terms, right? So again, get into a losing layer, and then you need to fix that losing layer with the same direction trades. And what I mean by that is this is going to be good too if you get into a demo account. If you've traded in this account already this morning or have profit on it and it is not at zero, then make a note of where you're starting, because the key here, to win the challenge is to make money, okay, on this layer. To complete the challenge is to actually make money by fixing this bad layer. Okay, so how we're going to do that is we got a market structure. Just a different color here. We got a market structure of something like this, and where you got a channel that's going down, whatever, the market structure that we're in. And then we jump into it and we see, okay, we're going to place a buy right here. So we place a buy right here, and now we're like, oh crap, it's coming down. We got to fix this layer. So what we have to do is when we come down to the next action point, we need to put another layer on right here. Okay. And then it keeps going down. We'll put another layer on right here. And what you need to do is this layer needs to be your fixing layer, where if it comes up, as soon as it comes up just one price cycle or to the next action point, which is right here, and it comes up to here, you can get out, and you get out of this layer, this layer, this layer, and this layer for money. So that's your challenge, is to get into a situation where you got at least one or two layers that you're fixing. Now, the challenge doesn't happen. This has to run against you a little bit, right? You can't just say, you can't take this layer. If the market comes down, you put another layer on and it comes back to here. That's not the exercise. The exercise is to get into a situation that we all find ourselves in, where the market is running against us, and this layer, we know we have to give it back to the market, right? If it came down here and went back up, I would not feel like I had to get that layer back to the market. So you got to get yourself into a situation where you know that the probability is less than 50% for you to win on that layer. So now you have to build in other layers to fix this layer, in order for you to, and you have to not only fix it, but you got to make money on this entire move. So the key here is getting that reset to zero. Once you get that reset to zero and you make money on that, then that starts to build your confidence quite a bit by doing this over and over and over. Because what happens is eventually what's going to happen is that it comes down here, and here's your make money on this little bit of a layer. But also what happens sometimes is that it does move past this and goes all the way up to here, and now you've just built into a nice little position, and instead of making money here, you make a lot of money here, and this turns into 1% on the day, and you're done trading. Or it turns into 2%, or it turns into 3%, depending on how many iterations that this happens. Or it turns into break even, right? But either way, if you're breaking even on this, if you're breaking even, with just a little bit of money, I should say, a little bit of money, then eventually it's going to pop and make you a lot of money. And that's how I trade every single day. And that's the beautiful part about the wobble technique, is breaking it up into layers. I think we have a tendency to want to profit on every single layer. Well, if we did that, then what's the purpose of breaking it up? Why don't we just put one lot right here and let it ride up if we knew exactly where it was going to turn? Well, we don't know where it's going to turn in the market. And so that's why you start building into a layer here, building into a layer here, building into a layer here. Well, guess what? This layer is not great. This layer is awesome, right? But we don't know that. We have no idea where the market's going to turn. We think it's going to turn here. That's why we put it here. We think it's going to turn here. That's why I put it here. But it just continues to go past. And so now we got to fix it. Okay, let's just say you have one trade here, and then here you have two trades, and then here you have four trades. That's not what I'm saying. Okay.
Oh.
Because this looks like kind of like a martingale system. And that's not what I want you guys to do, is just double down on your losses, because then you got to put 8 trades, right? And that's not what I'm asking you guys to do. So I just want to be clear here that that's not what we're doing. So a normal layer, I do want you guys to start light, because that's just proper principles, right? So a normal layer could be, you could have 4 here, right? And then it comes down and you could put another 4 here because you still think that that layer is in play. But the moment it comes down here and you got to put a third layer, obviously this now becomes, is it greater than or less than 50% probability that this layer could still materialize and the market could come back and get you out with profit? If the answer is less than 50, then you need to start building into adjusting layers, meaning that if this layer has now gone 5 pips against you, so this is 5 pip run, and this layer comes back 4 pips. So if the market moves back 4 pips, now you got to say, okay, it moved up 4 pips. So now I'm only losing 1 pip on this layer, but I'm gaining 4 here, and I might be able to pick up 1 here, which will in essence, or 1 or 2 here, which will in essence mean that my total is 6. Does that make sense? So I could be winning 5 or 6, but only losing 1. So now I'm making money, a little bit of money. Does that make sense?
Okay. So I would, after it moves up, the third layer moves up, giving me 4 pips. That's when I should take off this one, the top one.
Well, that's where you should get that reset to 0, close out of everything, and start over. So you hit that red X at the action point, right? So if you don't know what action points are,
I know
well, I know you know, but if you guys don't know what action points are a prerequisite to this challenge. So focus on action points if you don't know what those are, because it's vital that you know where to hit that red X, right?
Okay, so that's the challenge.
So that is the challenge, is getting out of all of your trades, getting that reset to 0, and being profitable on that. Guys, learning this technique will increase your confidence and help you to not take those catastrophic losses. Nick says he's in it right now. Is that a demo account, Nick, or are you doing it in your real account because you found yourself in that situation? Okay, good. Okay, so again, the challenge is not to get into a layer and then make money on this layer. The challenge is to give this layer at a loss. This first layer, so the first layer needs to be a loss that you're giving back to the market. But all your other layers that you close out of need to equal profit. So everything you close out, whether that's one, well, it shouldn't be one, whether that's 3 or 4 layers that you're closing, all of these need to equal profit. A little bit of profit, just profit. And so that's an easy way to do that. It's an easy way to do that if, or to recognize that if you're starting out brand new in a fresh account, just as long as you're in the green at the end of the challenge, you've completed the challenge. Even if it's 0.001, you've completed the challenge. So you're not looking to make a ton of money here. You're just looking to break even, pull a little bit of money. All right.
Okay.
So Josh, do you understand the challenge? Are you ready?
Yeah, I think I understand it.
Are you ready?
Yes.
Can you see how this is going to help you?
Yes. And I've done this before. I'm just still working on my consistency and performing it. I just picked that one spot because it's a pretty good spot to start losing at. So I've got 1, 2, 3, 4, 5 losing trades on the first layer. 5 losing trades here. And now I have 1, 2, 3, 4 down here. Should have gone into a couple more. Missed that.
So the key here is to not also don't adjust your quantity size too, just in case you guys, it's keeping the same quantity. Whatever you start with is wherever you're going to get at. So if you want to increase your total quantity, just increase your trades, not your quantity. But yeah, that's a good place. So you're in here, you're in buy. That was a perfect place to kind of put that buy, right?
Oh wait, I thought I did it upside down, but I actually did it right side up. So now would I start to lighten up on that bad layer? Like that's what I generally do.
You could, and that's another technique. But for the challenge here, we're just going to look to hit a red X and close, flatten everything for profit.
Right. Okay.
But that's another technique for sure.
This one's a pretty good chance here.
So what I'd like for this challenge, and it might be difficult because of market conditions, but what I really would have liked is for you to get into more than two, like at least get 3 layers on, right? Because a lot of times it's easier to fix one bad layer with 2 layers. So you have a total of 3 on, right? For me, if I have 1 layer, or if I have 2 layers,
Oh, shoot.
If I have 2 layers, then this layer still is kind of in play, right? But it might not be because of the trajectory of the market. So the trajectory of the market right here could just lend itself to be like, hey, this is probably the place where you should have hit that red X if it's going to continue to run down, right? And so knowing that and knowing the market conditions also help you to identify areas of where you can and should take that red X.
So now with this new data that came in, this would be a good spot to close if I get a leg up.
And so the other thing too that you could do is if you feel like it is going to come up and touch that area one more time, you could double stack this layer.
Okay.
Do you know what I mean?
Yeah.
If you feel like that's a real possibility, then you hit that red X there and you complete the challenge.
That makes sense to try it here because it could be a tiny little triple bottom.
Sure. But if that doesn't happen, then you got to know that you got 1 layer here and you got 2 layers here. And so if it comes down to here, this is kind of your next, action point, then you need to probably put in a heavier layer here for the X now move down to here. Does that make sense?
Yeah.
So you have to have enough layers on to where if it comes to this point right here, you can hit that X, close out of this layer and these layers and still make a little bit of money. I think I'm done trading for the day. But I did make back what the market took and another 1% on top of that.
So, David, in putting on these layers, it doesn't have to be in 2 different price cycles.
It doesn't have to be in 2 different price cycles as long as you're confident, like we just talked about. Like this could be a good place for a little bit of a bounce point to come up here and test this. However, if you're wrong, which we're wrong as traders. If we're wrong, then we have to know that we put 2 trades on here, right? And that's all I'm saying, or 2 layers, I should say, not trades. All right, so let me go back to some question. How would you adjust one on a layer that says 95 pips against you and keep adding and now heavy, and when it runs, I get stuck? Well, I wouldn't let it go 95 pips against me. That's why I have a 35 pip stop loss. And I don't usually adjust that stop loss unless it's like my price cycles are 20. That's usually the only time I adjust my stop losses is when I'm in a price cycle situation. This market is not a price cycle market. So I don't think I would let it go that far, first of all. I'm not trying to call you out, but it's kind of hard for me to give you an answer on something that I wouldn't do. So just like up here, I didn't let them go 20 pips, right? When it came down right here, I was like, okay, if it crosses here, I'm going to get out. And so I have where I take my max loss, and right here, if it broke that, I would have been like, okay, I'm going to take my max loss. Plus, I already kind of was looking at this as a possible fib for 100% retracement, right down to here. And right here, Josh, for the challenge, you're doing it correct. But the problem, I don't know. Do you know? I didn't watch, but do you know, is this a heavy? Because I'd probably go in a little heavier here. Now, what I mean heavy is I probably would have restarted in this account at 0.01, just because you needed to start lighter is all. Because you only have one lot in this account. And that account probably started with 0.01 because you only have one lot. So you need to be cognizant of that. Does that make sense?
Yeah.
How many bullets do you have?
But I have 50 bullets regardless. So a 0.02, I just kind of made the math easier in my mind.
That's fine.
I'm just saying.
Yeah, that's fine. I just, if you run out of bullets, then you can't execute on this move, right? And this market could eat bullets up pretty quick.
Yeah. At the moment, it's looking like it's going to have to run.
Yeah, this is my loss, my stop loss.
20 more pips before I can really get into a good size layer.
Cool jumped over and he's been flipping back and forth between the boot camp and this. And he says Sean's in this exact thing right now on the boot camp. So
now we got to beat him.
So he's doing the exact same thing that we're doing in real life in the challenge. So he's probably buying like what you're doing.
And it looks terrible.
But this is, like I said, this is the technique that I use and he uses every single day. So this is a great challenge to have as a technique in your back pocket, right?
I got stopped out.
Why? Okay, let's talk about that. Why did you get stopped out?
It hit my stop. It got to my stop.
Because you didn't give yourself enough bullets, so you went heavy. Because that's what all the culmination of all these challenges are kind of leading up to. So the first thing that you needed to do was your pre-trade setup in your demo account. Now, Cliff, do you mind if I pick on you just a little bit? I'm not going to talk. I'm not going to talk to you as a you. When I say you, I mean everybody. Okay.
Yeah, no problem.
I'm generalizing this.
I have thick skin, man.
Good. So, because this is exactly the point to this challenge is like every single thing that we've done to this point leads up to this, right? And so yesterday we did a pre-trade setup. And if you failed to do a pre-trade setup on this challenge, then and you got part of your pre-trade setup should know that, hey, the market is moving, so I need to go light. What does light mean? Well, that I need to reduce my position size. And particularly with this challenge, when I'm asking you to get into a loss, you know that you need to get into light, right? So what light is, that's what I'm saying to Josh. In this account, I probably would have started with the 0.01. I don't know what account size you were in, but if you were in a 10K demo, I probably would have started with a 0.02, right? On a 10K demo. 0.05. Give yourself enough bullets in a market that you open up and you're like, oh my goodness, it just ran 60 pips. It just ran 20 pips. It's not looking at this market, you're knowing that you could get a 20 pip run. You could get a 30 pip run. So if you get a 20 pip or a 30 pip run against you and you kind of see that, then you definitely need to lighten your position. And that's not just for taking losses, that's for wins too. So if I normally trade at a 0.10 and that's a normal trade allotment, and I recognize that now I got to go light and I usually go for 3 pips here. Well, now I can go 0.05 for 6 pips and it's the same, right? But it's not the same because you're lighter in your positions. You have more bullets. You have more bullets at 0.05, but you're still making the same amount of money because you're doubling your take profits. Does that make sense?
Yeah.
So in order to get into this challenge and execute this challenge, there are a couple prerequisites. You have to have your pre-trade setup challenge completed. You got to understand your pre-trade setup. You have to understand action points. And you have to understand, then you have to understand, obviously you got to understand layers, and all your layers need to be the same. And then once you understand that, then you can take this challenge, and I don't know if we'll call it, floating. I have no idea yet. We'll call it floating trades. We'll call it reset to zero. I don't really have a great name for this technique, but it's a technique that I do every single time, every single day. But these are the prerequisites to accomplishing this challenge. If you don't know these, this can be very difficult to execute this technique, right? So go ahead, Josh.
I like to take soft losses rather than our hard losses or max loss, right?
Yeah. So I usually have just called it like, this is kind of adjusting. This is kind of a trade adjustment. There's multiple different techniques to trading adjustment. And you called out one where you just start you peel profit off, peel a loss, peel profit, peel a loss, right? That's a technique that I do as well. And so I'm going to have to come up with a pretty cool name for this. But at the same token, Cliff, your challenge isn't over. Just get into another demo account and start over and take this.
I did that and I buy, and then it just hit my targets.
Well, that is the reason why you need to do this challenge. Honestly, because I know that pre-trade, I know action points, and I know layers. So you need to get this challenge, and you need to figure out how to pass this challenge without getting a 5% loss. Now, I understand that today's market has some unusual structure to it, because you don't typically get these runs inside of a trading session. But guess what? These are the days when you get these runs that I take losses on. These are the days where you end up losing on. And so when I come into the market like this, I'm like, oh boy, this is going to be a tough one. I knew that coming in, and so I didn't really want to risk a whole ton in the market today, because I knew that this could be a potential day, because it's really difficult to trade when you don't have price cycles, you don't have normal structure to the market. But when you find yourself in these situations, because all of a sudden you could be price cycle, boom. How do you fix the booms? And this is exactly how you fix the booms. I guarantee you that Sean is going to fix this. He's just waiting for that turn.
Now, what I'm saying, that I started over with my 0.01, and I started buying, and then it came up and hit my profit target. So I have to start over again.
You guys start over again, yeah. So the purpose of this challenge is to fix a layer, not take profit on it, Cliff.
But I'm not the market.
I know. I'm just kidding.
Hey, Dave, I would have missed something. So were you saying to do 4 to 5 positions per layer but when we're fixing it, so when we're taking profit, it's double what it is. So let's say our target's usually 2 pip. Do we go to 4 pip on our next layer and then 8 pips on the third layer and so forth?
I don't want to put a hard and fast pip count to it. It's action point. So basically right here, Josh is trading this exactly to what the challenge is. But what he has to have now is when the market pops to here, this is the next action point. And I don't care how far that is. When the market pops to here, he has to come out and be able to hit that X right there for a little bit of profit. Does that make sense? So this layer right here needs to build him profit right here. And this is the number one reason why, if you don't have enough positions, you need to start light, particularly in your pre-trade setup. And you're like, oh my gosh, it's moving more than 20 pips. I better trade light, because if Josh would have started out with a 0.05 right now in his account, he'd probably be risking, well, definitely he would have hit 5% already in this account, right? But all he needs, and you've heard Sean say this, you've heard me say this, is all I need is one move and I can fix all of this.
So I just did that now.
Right. And so Josh is, I mean, this is a perfect, proper trade execution, Josh, of this, as long as you can get this down to, and the reason why you didn't get it down right here as it's coming up, which you're not, is because you didn't put enough on right here.
Okay, I'm going to take this now so that I get one more opportunity to try it again.
That's great. That's awesome. That's adding into the next technique that I do sometimes, where if I don't have enough, I would still take it and then get into sells and fix on the next move right here, because proper technique says that you take it, everything here, because, well, guess what? If it stalls, what is it most likely to do? Make these trades worse. And so I'd rather take it and then fix it on the move down. Finish my fixing of everything on the move down, right? But also, Josh, you could have held on to it, and for me, I would have held on to it just to see what it does here.
And I might have just got out there.
Right. It could have popped up, right?
Yeah.
It could have just had a pop and then get out. But by taking them,
I have more
sooner
opportunity
than the action point, you got to let that action point ride out. Does that make sense? I'm not saying it would or it wouldn't, but you didn't give yourself a chance to see. Does that make sense?
Yeah. I mean, I still have some of the layer. I just took maybe like half of the layer.
Sure. And you could also, if it fails to break this, and so Sean, I guarantee you, Sean just got out of everything and took his profit, because Sean has enough bullets to do that, to be like lose, win. And that's the technique that I'm trying to teach you. And so by knowing that and by having that on there, you can be more comfortable and confident in getting in early to positions, waiting for that turn. And then if it goes against you, you just wait for one price cycle the other way, get out of everything, and you're good. Now, the only thing I would have done differently here, Josh, is I probably would have hit that X on everything right there.
Right. It wouldn't have won though.
You still would have, because that's the proper execution.
Oh, okay.
Does that make sense?
Yeah.
The proper execution would have been to have enough to be profit here. But if you don't, and sometimes we won't, because we just don't do the math quick enough, or it doesn't allow us to get enough positions on, because it's just a quick move. It comes down really quick and goes back the other way. I mean, there's a lot of different reasons why, but this is still the proper area where you should take that, right? And get out of everything, wait for the pullback, get back in, and continue to fix it. There's, I guess, for lack of a better word, there's kind of techniques within the technique, right? But knowing where the proper place to get out is the best thing. Now I would say don't do it now.
Right. Now it might actually go past that.
Exactly.
Yeah.
Because it came up, tested, failed the test, back down, is retesting, right? And so now we're looking at that action point to see if it will in fact break. If it does break to the higher side, then where's your next X area? Where's your next get out of everything area?
Oh, the next.
So you need to identify that right now.
That could be.
That could be, but also you want to sit and wait, because remember, this could all turn into, instead of just a little bit of profit, it all could turn into a lot of profit. Right. If it decides to pop up and come all the way up to here, well, if you would have left these on, then you would have turned that day from, I think you were down -2 to maybe even like +2.
And I almost always hold on like that.
Yeah,
but that's got me in trouble more times than.
Yes, because you're holding on to the wrong layer.
Right.
You got to hold on to your profit layer. Does that make sense? Hold on to your profit layer. And then when this fails, you hit the X for everything, and you dramatically reduce your losses, if not fix them. But I think what you fell is you don't hit that X. And then because you don't hit the X, then it comes down even further and turns all of these into, well, not money. That's the wrong sign. It turns all of these into losses. Does that make sense?
Yeah.
So that's why it's important to understand action points and to be strict with those action points.
So now when it gets to this point, should I just watch how it acts there, or should I just close it when it hits there because I'm fighting it so much?
Well, that's your decision, because sometimes I will take it just because I fought the battle and I'm up. Right. I'll be like, okay, I'm going to take that as a win. Or you could sit and see, okay, what's it going to do? If it crosses this with the body, then this is my next one, right? This is totally up to you at this point. Like I just said, for me, I'm done trading. I'm at like 4.05% on the day. I don't need to make any more, and this market's kind of crazy, and so I don't want to risk it. But you're like, you know what? I just went from -2 to +50. That's good enough fight for me. I'm going to take it. Do you know what I mean?
I would at least get that back to reset to 0 so I can reevaluate.
Right. So that was almost a near perfect, proper execution of this. So you tell me what you took away from this, and then also tell me maybe what you could have done better, or maybe something that the learning objective that you could have done better at, or maybe something that you did well at.
Yeah. So I just want to talk about that bottom layer.
Okay.
A lot of times I wouldn't have let that go, but this time I decided to free up some more bullets in case it ran down again. I just didn't want to be without some opportunity if it ran down again.
Sure.
Otherwise, most times I would, because without that second opportunity, if it decided to run down another 20 pips and I hadn't taken that profit, I probably would have risked it out.
Sure.
So,
let me just, before we go on to a different topic, you got to know where your action points are, right? And over here on the 5-minute chart, guess what it did? It came all the way back down, touched the top of this. This to me is a great balance point. Yeah. Because you know that that's a great balance point, the chances of it running back are pretty high, particularly because it just ran down. So you're overextended, right? You're overextended. You hit a great bounce point in the market, right? A great bounce point in the market for it to come back and just a little bit and even cross this and still stay in a channel. To me, the probability of it crossing this was pretty high. Does that make sense?
Yeah.
And so for me, I would have held on to it just because of that. But you started taking it before it even hit the action point.
Yeah. I was trying to anticipate. So I was too early for sure.
Right. And so that would be, I mean, everything else was perfect. Great execution of that. But that to me was the difference between, I think correct me if I'm wrong, but I think you failed to analyze the big picture and you were just looking at this. Does that make sense? And sometimes if you kind of just are looking at this area right here, that influences our decision, when really we should be looking at this as our influencer on the, like, where's it at in the chart, what's happened, all that kind of stuff. And that's what I go to when I'm in a situation like this where it just keeps going down and down and down. That's what I go to, is I go, okay, where's my next bounce point? Oh, here it is. You know what? It hit that. So there's a good chance it's going to bounce. Right. And so for me, this was a really, really good, proper execution. Plus it also, I get this question a lot, too, is like, when do you just hit the X and call it a day? And generally it's when I take a 2% loss, but he was down 2%. But he was down 2%, but his trades were still viable. He still is good on his trades. So meaning that I don't realize this as a 2% loss unless it just keeps coming down and breaks this. This would have been my hard X. If it broke below this right here, I would have been okay, I'm done for the day. Right? Maybe, I don't know if it widen that out, but really it's below this. Would have been, I'm done for the day on the 5-minute chart. Fought the fight and I lost. Right? So you just charted your trades. What did that tell you?
I just wanted to see where I was taking out my that first little section. So that's where I ended up closing those right there.
Mm-hmm.
And so the better spot, can you just show where the better spot would have been to hold on to?
Sure. If you wouldn't mind giving me control, because it'd be a little easier to do that.
Yeah, there you go.
Okay. So let's just kind of zoom in here a little bit real quick. Okay. So what you did right here on these trades, so the ones that you took right here and right here, I would have waited to see if this would have crossed this. That makes sense. You took the trades on this candle right here. These guys you took out right here before it even came up to here.
Okay.
And then on these guys, I think, I'm not 100% certain, but I think you took these guys when it came up and crossed, and it was early in the candle, like it hadn't closed the candle, right? So it was like still testing. The candle was still flickering, and you took it, and I was like, I would have held on just to see if this candle would have closed here.
So I think I think it totally is that I hadn't predefined my action points just perfectly first.
Right.
And then had I had them defined, I could have trusted them, but I didn't have them marked out too well. And so then I ended up wasting some money in the wrong place.
Sure. And had you have held these trades and brought these up to here, right here, where you got out of everything, you probably would have been closer to the 1%.
Yeah.
Do you know what I mean? On that move. And that would have been like the perfect execution. Other than that, you executed this exactly as I wanted you to for the challenge sake. Does that make sense? And so this was the proper execution of this challenge. So if anybody still didn't understand the challenge, go back and watch this, because that's what Josh executed this perfectly on this challenge. So the point here, Josh, is knowing that you can make 1% and still take losses. Right?
Yeah.
You took a loss and you still made 0.5%. You were up. Right? And that's the point, right? Not necessarily the market gave us these big moves,
but generally you don't get these big moves. Generally, you're not going to get 1% out of here. You got to go through this like 2 to 3 times. And then eventually, if it pops up and makes money on all of them, then you're done trading or whatever. It's just it's going to happen at some point, right? Where you're going to win on everything. But this is the proper execution of taking a loss and still winning. And if you can understand that in your trading, that I can take a loss and still win, boom, that's huge to your psychology, because pilling the losses is what's going to save you from catastrophic losses. It's holding on to those losses. It's holding on to these losses because you think it's going to come back, and not adding these layers out of fear. This is what I see people do, is that they don't put more onto them because they're in a losing situation. So they don't put more trades on, and they just hold on to these, and they're still losing, and they're waiting for the market to come back. And then when the market comes back, like 3 hours later, they tell themselves, I was right. And then that reinforces a bad behavior. Does that make sense?
Yeah.
And so the key element is taking a loss and fixing your trades. All right, let's look into some of the questions. Joseph says you did 151 pips from 0.06 profit, then it went against me at 2.7 and 150. So how did you do the challenge? Did you accomplish it, Joseph? Ash says you are adding at each action point or at the end of a price cycle at action point. Oh, good, Joseph. And do you wait? So just the correlation of an action point and a price cycle sometimes are the same, not all the time. So there's a difference between an action point and a price cycle. My action points that I call action points are basically just where you want to enter or exit a trade. And so when you're looking at this, like Josh was saying, he needs to get a little bit better at predefining where his action points are, not necessarily price cycles. Particularly in this market, I did not trade with price cycles. It just is not a price cycling market. So I kind of throw price cycles out the window for today. So, and then he said, and do you wait for the candle to bounce before entering or exiting? I'm sure he's saying an action point when it gets there. No, I kind of tend, that's why I break up my trades. So I kind of get in early and then I can build back in. So the other thing, Josh, you could have done as well, if you wanted to, this is what I do, is that once I get confirmation of that break, and I get a little bit of a pullback for like the retest of this break, which it didn't come, you could have built back into another layer here for the ride up to that action point, because you got confirmation over here, gives a little bit of pullback or a retest. That's great. If it fails to retest, then you know it's going to move higher. And you could have built into one more layer here for another profit here. And I do that all the time. Like, so that's the next evolution of this, is like you're trading early. These are all early trades because of the possible turn didn't happen. So now these are adjusting trades for possible. You're still waiting for that possible turn. You're still early over here, right? These are all early trades. But as soon as you get that turn and that confirmation of that turn, now you can stack into more trades, and you can, and these are all money trades, right? These would all be money trades, but they would be short money, maybe from here to here. But you got confirmation that turn happened, so might as well capitalize on that turn and throw some more money at it if you have the positions. And that's what I do. Do that every day, like early. Oh, confirmed. I'm going to make some money here. I'm going to build into that move. So that's why these are wobble fades over here. These are wobble builds. These are building into the move, right?
Yeah.
That's the next evolution of this, is to have the confidence to know that, okay, we just got that turn. Now I'm going to put more money on it and make more money because we got the confirmation, as opposed to sitting on your hands once confirmation happens and just waiting for that exit. But that wasn't part of the challenge today. That's kind of the next add-on to the challenge. All right. So let's see. Just reading your comment, Joseph. You actually took 5 21 pip losses. So did you complete the challenges where overall were you profitable? Just curious. So, and then Asha's, oh, good. Congrats. That's awesome, Joseph. $8. Hey, but that's this challenge. This challenge is to be profitable in any way, shape, or form, or, make a little bit of money. Asha, so are you adding, how many trades do you add without getting heavy and martingaling? Like I was saying before, at the beginning of the challenge, I look and kind of have an idea of how many pips that I'm losing on this layer. And if it comes back to this action point, Josh, do you mind if I drive again?
Yeah, you take it.
Okay. So I do this all the time. Is the middle mouse button where it brings up the crosshairs. And so I'm like, okay, at this action point, I'm going to be losing 17 pips per trade, 18 pips. But if on this action point comes back, I'm going to be making 25, right? And so obviously, if I have equal to or more than this, I'm going to be making money on this layer. That this layer right here negates this layer in just pip value, then these ones will as well, right? So that's kind of how I look at it. And that's why it's not martingaling. Martingaling, you would have ran out of bullets on this. It's just getting in early, waiting for the confirmation, right? And that I do that all the time as I measure how many pips do I have to do. And generally if it's against you 10 pips, you're negative 10, you get one price cycle. You know what your price cycles are. And if they're 5 to 6 on the price cycle, then all I need is one price cycle. And then I can fix that trade because it will now, if it will get a one price cycle up of 5, that negative 10 now becomes negative 5. And this positive trades that I have money on become plus 5. And so now it's a wash. But if you have more trades, so if you have 4 trades here and 8 trades here on this positive layer, now you're making money, right? And I'm not saying 8. I shouldn't say 8. This should be like 6, right? Because I don't want you to double your layer. Just have a little bit more on in case this doesn't go 5 and it only goes 4. You can still get out with a break even or make money, right? So I'm not saying, there's no rule that says you need to double your layer. The only time Josh did that was down here. I think you doubled this layer because it came back and it went down and went back up, and you say, okay, here's that possibility of it coming back to here. And that was his first X. And so by doubling the layer here, he could have gotten out here if he needed to, if there was a possible continuation of that turn. That would have been the perfect place to get that X. And he needed to double this in order to execute here. But luckily, the market gave him execution here, which took him from break even to positive. Makes sense?
Yeah. Hey, Dave, could I just talk about another scenario?
Absolutely.
Let's say, because I saw that one bounce is pretty much, it's either going to be this one or it just is not likely going to show up.
I can't see your mouse.
Oh, I wasn't.
So what are you talking about? That bounce right there?
Yeah. So like I went in, I used all of my bullets. The other half other half of my position was all here. Now, let's say it just kept running. Is it better just to take a max loss and a hard loss before risking out or before your allotted amount that you want to lose?
So Is it better to take a max loss than risking?
Yeah, or just have it just take it on. What would have been the best scenario to mitigate my risk if it continued just to go down from there?
Honestly, in your account, that's why I mentioned I probably would have gone with a 0.01 in your account. The only reason why I would have done that is because of the market structure today of running up 70, running down 70. Does that make sense? Because you needed to have 100 bullets, right? You needed to have 100 bullets in case it runs 70 against you. If it ran 70 pips against you, you need to have 100 bullets. Normal market conditions, where you don't get these runs, you're just fine by only having 50 bullets. Does that make sense? But the very, 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 very first thing I said was I would have probably gone with 0.01 because of market structure, because of these moves. If you've done that, then that answers then that would answer your question. If you would have started with 0.01, I would have never taken that max loss because I could withstand 100 pip move against me at that point. And all you really need, and let's be honest, has this ran 100 pips before on us without giving us one pullback? Yes, it has. And those are days where you just need to say, oops, I lost. But how often does that happen? Very, very rarely. And so as traders, we always trade the probabilities, right? And so by hitting that red X, by hitting that close all, it eliminates you just taking the possibilities off the board for it to turn. But if you're still fighting, and this is what Sean does every single day, he trades every single day I trade. I'm going to get into a situation like this. You just are. And so if you have enough bullets to fight, you fight through it. And you get yourself into a position where all I need is just one price cycle. And this is not negative 3%. If you're negative 3% on your first battle, you're too heavy. If this goes down negative 3%, you're too heavy on your first battle. If it's your first battle, you should only be like 1 to 2% in that range of an unrealized loss. Does that make sense? That's about how heavy you should be for the market conditions. Is hovering really closer to the 1.5. But if you're beyond 2, then you're too heavy for the market conditions. And so recognize that if you get out, then readjust your position size, because you just got out for break even. The market conditions haven't changed, but you were too heavy. So reduce your position size and keep trading. I'm not sure if that 100% answered your question, but almost always all answers can look back to position size, because position sizing is key element and a foundational thing that everybody should be able to recognize when trading is what position size should I be trading today. Did that answer your question?
Yeah.
Okay. Anybody else have any other questions before we bounce for the day? But I really think that this is a good challenge. If you guys don't just do it once, do it multiple times until you can react to it, so you can understand it. You can do all the points. But Josh, this was perfect execution of the challenge today. So I appreciate you showing everybody how to pass a challenge. Now take this and put it into practice.
Yeah. Cement the practice.
Cement it. Exactly. All right, guys. With that, I think we'll call it a day. And we'll see you guys tomorrow. So thank you guys. Appreciate it.
Okay.
Thanks a lot, Dave.
No, bye-bye.
Thank you.